Welcome to MBA Now. I'm Rob Van Raphorst. Last week, we released our monthly Mortgage Credit Availability Index. However, there were some changes. Here to talk about it with us is our Vice President of Research and Economics, Lynn Fisher. Lynn, thanks for being here.
You bet.
Lynn, let's talk about the changes. What prompted you to look into the methodology behind the Credit Availability Index?
Well, Rob, we always monitor the indexes that we publish, and we're looking for ways to make them better and to make them more relevant for industry. So, for example, with the Credit Availability Index, we have gone back and published an expanded history on the index. We've published sub-indexes to help unbundle what's going on a month-to-month basis. And so last week, we were really excited to update the methodology of the index in order to better fit what's happening in the market. We've seen some changes. We want to update the index in order to better account for that.
Now, within that methodology, what specifically did we change?
Well, we've done two things, and so one's probably more important than the other, and that is we've updated the methodology to account for a broader group of mortgages. So this is a supply side index. We're looking at how investors invest in mortgages and mortgage credit. And with all index, there's always an issue of what you're following and how you're following it over time. And so we had been following a set of mortgages that were available in the base month of our index, which is March of 2012, and we've noticed that the marketplace has changed since then. And so what we've done is to broaden the bucket, so to speak, so that we're tracking more things. And we've also made a small change to the definitions of conforming and jumbo mortgages that we're tracking. Now, those two buckets do not include any government-backed mortgages by FHA, VA, or USDA. Rather, it's just conventional-only mortgages that are subsetted into conforming and jumbo.
So then how, going forward, is this going to change how we measure, MBA measures credit availability?
Well, as I said, we believe this is an improvement to the index. And if you go back and look at what's happened year to date this year, you'll now see that the total MCAI, the Mortgage Credit Availability Index, is pretty much flat over the year thus far. Whereas in the old methodology that we were using, there was a slight decline in the index. And that's mostly being driven by an increase in the jumbo side of the market. So not unlike what we've seen historically, jumbo has really been pushing credit availability overall, and we're finding that again. So it was really the jumbo side of the market that we're capturing better now, and that's really resulted in just some slight changes to what you'll see when you look back at the history. If you have any questions about the index, if you go to MBA.org and type in credit availability, or mortgage credit rather, you'll be able to find all sorts of information, including FAQs.
Yeah, it's such an important research product, so I think it's really important for our viewers to understand the thinking behind what we're measuring, and when we do make changes like this, why we did that. So we really appreciate you coming by and explaining that to us.
You bet.
Thanks a lot. We'll see you next time. Be sure to follow us on Twitter at MBA Mortgage, or check out Mortgage Bankers Association on Facebook and Instagram.